Inflation in the Eurozone slowed down, though marginally, so the inflation report was of no importance for market sentiment. Apparently, the ECB will not rush into another monetary easing after the first rate cut. That's why the euro is been in favor with investors. Nevertheless, ECB policymakers decided to remind markets of their viewpoint and agenda. So, they reiterated that the central bank needs more evidence that inflationary pressure in the Eurozone has been contained and that the inflation threat has gone. According to flash estimates, the annual inflation rate in the Eurozone inched down to 2.5% in June from a 2.6% a month ago. Analysts had projected the same downtick. Besides, the core CPI, which excludes volatile food and energy prices, remained flat. No doubt, such dynamics cannot serve as a serious argument for the ECB. That's why the euro remains a priority among investors. Meanwhile, the euro regained its footing against the US dollar, but the euro is unlikely to develop a rapid rally. The anticipation of the crucial report from the US Department of Labor hampers its growth. On a Friday, market participants will get to know employment trends in the US private sector. On the grounds of the non-farm payrolls, analysts and markets will be able to predict changes in inflation in the US, and then the timing of rate cuts by the Fed Reserve. Until then, traders want to play safe. Financial markets in the US are having a shorter session today before Independence Day tomorrow. Currently, the euro-dollar pair is trading next to the upper border of the range. Hence, the most likely scenario is a gradual movement towards the lower border. For this, the bears need to work hard in the thin market today. Thus, the attempts may completely fail. Now the instrument is trading within the sideways range of 1.0670 to 1.0750. Crude oil back is still trading at about a 2-month high, above $86 per barrel. The price even made efforts to grow above $87 per barrel. Now the bullish sentiment is dominating the oil market after the Brent price completed the 7-day stagnation with a bullish bias. From the point of a technical analysis, oil traders are gradually increasing long positions on the Brent benchmark grade. As a result, the price is likely to gain bullish momentum if it settles above 87. The macroeconomic background encourages the rise in oil prices. According to the American Petroleum Institute, U.S. oil inventories contracted sharply by 9.2 million barrels last week. This is the sharpest decline since the beginning of August 2023. Meanwhile, escalating geopolitical tensions in the Middle East are raising concerns over oil supplies as Israel continues its siege of the Gaza Strip, ordering the Palestinians to leave Khan Younis ahead of a looming strike. On the other hand, market sentiment is dampened by the news that OPEC has been pumping up its oil production for the second month in a row. Thanks to increased production rates in Nigeria and Iran, this trend contradicts the voluntary output cuts of OPEC and its allies. You have watched a roundup of the global financial markets for today, July 3. Keep close tabs on the global markets on the InstaForex TV channel. Feel free to leave your comments. Our experts are always ready to answer all your questions. Thank you for watching and see you online tomorrow.